Sage here for Calcine Media. Thanks for joining us for our trending news topic to follow, the best pot stocks for June, and please subscribe to our channel and press the bell icon to be notified of the latest videos. America has legalized medical marijuana in 16 states and even for recreational use in many states, including New York and California. With many more countries looking at decriminalizing the use of marijuana, it is becoming more accepted as an asset in the marketplace. And like any biopharma company, these stocks can at times be risky, and investors should always assess their own financial objectives that are in line with their investment choices, taking into factor, in a big way, the risk exposure. So we've all heard about synthetic meat replacement products of late, but have you heard of synthetic cannabinoids? Amyris Inc. is a Californian biotech company. Most recently, their quarter-over-quarter sales figures were up 96%, having a $3.5 billion market capitalization over the last year. The stock has seen huge growth of approximately 600%, and the technology Amyris Inc. is developing could prove revolutionary to the cannabis industry, taking away the need for expensive growing facilities. To give you an example, the risk-taking traders who bought the stock when it hit the November 2020 low of $1.88 would be holding ownership of shares worth closer to $12 from this synthetic cannabis product. Curaleaf Cannabis. This cannabis producer came into the spotlight after the acquisition of Harvest Health, and although already a national company in the United States, with the closure of this Harvest Health deal, subject to shareholder approval, will expand Curaleaf's horizons by adding the markets of Arizona, Pennsylvania and Maryland. Revenue growth for 2021 has reached 102% year over year, recorded by the end of the first quarter as $194 million. With the newly acquired Harvest Health, the company is expecting to generate $1.2 billion in revenue and EBITDA of $461 million in 2021. Even without the Harvest takeover, Curaleaf shows strong earnings for 2021 of $815 to $850 million, with EBITDA of $355 to $375 million. Curaleaf is also boasting strong ability to adapt to an evolving market through strategic use of capital resources. The acquisition of Harvest Health, which offers an additional 126 dispensaries in 11 states, will provide the company with required funds for debt reduction. Cronos Group, known as a producer of the mature-aged use of cannabidiol (CBD) products, with year-over-year gains of 133%, induced perhaps by people's growing need for their high-quality products during the USA lockdowns, where marijuana delivery was considered an essential service. Cronos can offer an investor a classy cannabis product and a strong growth inventory. However, shares have seen large fluctuations ranging from between $4.62 and $15.83 per share in the last 52 weeks. So, investors must be ready for the swings. Curaleaf, another US-based biotech firm positioned in Massachusetts, USA, have shown first quarter revenue that rose 170% year over year, reaching $260 million. And Curaleaf's balance sheet is not yet profitable, but the acquisitions it completed in 2020 are still showing signs of growth. The company also has seen huge surges in retail and wholesale sales, with a massive boost of 231% in retail revenue alone, reaching $188 million. Its wholesale revenue mainly was derived from the Select brand that was acquired from Cura Partners for $948.8 million. And this has pushed up the wholesale revenue for the company to $72 million. The company also has a growth facility, 102 stores and 4 dispensaries, which have added to the higher revenue, enabling an EBITDA of $63 million, which is a 213% year-over-year increase. Cara Therapeutics. This company has a comparatively small market cap, although is able to show large returns, with highs in the share price posted in April 2021. A bargain entry point is currently being seen at the $12 price level, and this biotech has seen its price reach as high as $28 due to its high quality pain management cannabis and CBD products. However, it's difficult not to notice the significant growth seen in its most recent quarter-over-quarter of 2,384%. GrowGeneration Corp. You couldn't talk about marijuana cultivation without bringing up hydroponics. One of the leading hydroponics equipment suppliers in the US was founded in 2014 and offers 50 retail centres. The company is not able to pay any dividends yet, but investors who are looking for growth stocks might be keen to look further into this stock's price to earnings ratio. The price to earning ratio sits at approximately 90.27, which might offer some steep rises if you're willing to keep watch of the charts on a regular basis for short-term swings. And with President Joe Biden's plan involving a focus on the legalization of marijuana, the USA might see the state legalization turn into a federal legalization. And the companies listed in this report all have these factors in common: notable revenue growth, growth strategies that allow reduction of debt, stability in the profit to loss balance sheets, and a snowballing footprint, turning some into major national players in the sector. Although overall biotech stock are usually not to be perceived as a get-rich-quick scheme, with time, carefully considered investments in these companies could offer returns. And if you like this information, please like, share, comment on the video below, and subscribe to the YouTube channel. Press the bell icon to be notified of the latest videos, and for regular updates and more information, head to the website calkinemedia.com. And this is Sage for Calkine Media.